All right, let's get into it. The suits on Wall Street thought they had the game figured out. They built a kingdom, wrote the rules, and for decades, nobody could touch them. But then, a glitch appeared in the Matrix. A new battlefield opened up, not on some trading floor, but right here, online. This is the story of how the rulebook didn't just get ripped up, it got set on fire. In this, right here, from the co-founder of Reddit, this is the thesis statement. See, for the millions of apes who jumped in, this was never just about the money. It was a declaration of war, a chance to, for the first time ever, push back against the giants who've been playing with the system for years. And that pushback, it had a price tag, $6 billion. That's how much the so-called smart money, the short sellers, bled in just the first round of the GameStop saga. This wasn't just a paper loss. This was a direct hit, a haymaker, that showed the castle walls could be breached. So yeah, GameStop wasn't a fluke. It was the first shot fired in a war that's still going on. It exposed a fundamental conflict that had been brewing for years, the hive mind of the individual versus the top-down control of the institution. So, the big question is, how? How did a decentralized army of retail traders, a bunch of Davids, manage to take on Goliath? What kind of weapons were they hiding in their arsenal? Let's break down the toolkit for this revolution. The main weapon was a beautiful piece of financial judo called a short squeeze. Basically, the apes found a stock that the hedge funds were betting would go to zero. The suits were over-leveraged, greedy, so the swarm came in, buying and holding, which drove the price up. This forced the short sellers to buy back the shares to stop their own bleeding, which, you guessed it, just poured more rocket fuel on the fire. They weaponized the hedge fund's own greed against them. But the strategy only worked because of the coordination. And this wasn't happening in some fancy boardroom. It was a decentralized swarm, organized on forums like Wall Street Bets. The memes, the inside jokes, the apes together strong mentality, that was the real engine. It was a full-blown meme stock war. And it all came to a head in one absolutely insane week. January 22nd, the rocket starts to lift. The 26th, Elon Musk himself drops a tweet, and it's like pouring jet fuel on the fire. And then, January 28th, the moment the game was revealed, trading apps, the very platforms that enabled the revolution, turned off the buy button. It was an outrage, and it looked an awful lot like the system changing the rules in the middle of the game. So the retail toolkit was simple but powerful. You had the easy access from so-called commission-free apps. You had social media for mass organization. You had a core belief system, diamond hands, which just means you hold and never sell. And then came the big brain move, DRS. That's where you pull your shares out of the broker's hands and put them in your own name. It's like taking your ball and going home, so they can't use it in their games anymore. Okay, so let's flip the camera around. While the apes were launching their assault, what was going on inside Goliath's kingdom? How does Wall Street's playbook work when the peasants are at the gate? Well, at the center of this whole mess is a little thing called payment for order flow. See, free trading isn't free. When you buy a stock on Robinhood, your order gets sold to a massive market maker, a final boss like Citadel Securities, who pays for the right to trade against you. This cozy little arrangement got thrown right into the spotlight when that buy button disappeared. And this really shows the two realities we were living in. The retail side saw this as a war for fair markets, a chance to expose a system they felt was rigged. The institutional side, they saw it as a bunch of uninformed gamblers creating a dangerous risk that could crash the whole system. Two completely different worlds looking at the exact same event. Now, the big accusation was that Citadel, which had a big stake in a hedge fund getting wrecked by GameStop, called up Robinhood and told them to shut it down. When Ken Griffin, Citadel's CEO, was asked about this under oath by Congress, his answer was clear and simple. Absolutely not. And legally, that's where it ended. Both companies denied everything. The big lawsuit against them got tossed out. But here's the thing. The legal system is one thing, the court of public opinion is another. For millions of people, the trust wasn't just broken, it was shattered into a million pieces. Okay, so GameStop wasn't an ending. It was a proof of concept. It showed that a viral story online could create a real-world financial earthquake. We are watching this new battlefield like a hawk. And while you wait for the next candle, grab your free gear. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or grab your NVDA stock on Moomoo. Links are in the description. Smash the like, subscribe to the tribe, Apes Together Strong. Because just a couple years later, we saw the exact same weapon deployed again. But this time, the target wasn't a meme stock, it was a major bank. In 2023, Silicon Valley Bank didn't just fail, it vaporized. In 48 hours. Why? A classic bank run, but supercharged by social media. The panic spread online like a virus. And you don't have to take my word for it. The data tells the story. A study found that banks that were getting a lot of buzz on Twitter before the run even started saw their stocks fall an extra 6.6%. Social media chatter was a quantifiable risk factor. And here's the data visualized. It's crystal clear. The banks on the right, the ones with high Twitter exposure, took a much bigger haircut. This is hard evidence that the conversation online has a direct, measurable impact on value when things get chaotic. So, what have we learned? We've learned that social media is now an accelerant. It's gasoline. The question now is, what happens when you pour that gasoline on the huge global fires that are already starting to burn? The battlefield is set, and these are the forces that are going to shape the next war. The way we see it, there are 4 massive waves about to crash on the market. You've got the AI revolution changing everything. You've got global supply chains being completely redrawn. You've got a huge political push for deregulation. And on top of it all, a new global focus on economic and national security. Any one of these is a game changer. All at once, it's a whole new world. And this isn't abstract stuff. Look at AI. The demand for electricity just from AI data centers is projected to grow over 175% by 2030. That's a massive physical change to our infrastructure. That's where you look for the next glitch. Then you've got policy. One proposal floating around could add $3.4 trillion to the US deficit. That's a tidal wave of cash that has to go somewhere, and it's going to reshape the markets whether we like it or not. And finally, security. In this new, messy world, countries are spending big on defense. We're seeing projections of NATO members hitting 5% of GDP on defense spending. That's a fire hose of money flowing into new sectors, creating new winners and losers. So all these massive forces are converging right on this new battlefield. The old gatekeepers, the suits, are now staring down a decentralized, globally connected public that's armed with information and zero-commission trading apps. The map has been redrawn forever. So I'll leave you with one question. Who gets to write the new rules? Let me know what you think in the comments.